After the call on Yahoo Finance starts right now, ladies and gents, boys and girls, Brad Smith here alongside Yahoo Finance executive editor and self-proclaimed Strong Island speed demon, Brian Sozzi. Is that a purple Patagonia to match Yahoo Finance colors, Sozzi?
I'm bringing my A game, Brad, because if you are not excited about this Tesla earnings call, you don't deserve to be an investor and you don't deserve to be in business news. Let's get after it.
All right, well, let's take a look at this after hours move here. We're seeing shares of Tesla down right now in extended activity. We've got the Yahoo Finance Wi-Fi Interactive loaded up for you, and you're seeing that move down right now by a little more than 3.8% here. And particularly here, this has been in the red since the results dropped and throughout the earnings call. I want to play a snippet of that earnings call where Elon Musk, the man himself, he described this macroeconomic backdrop as well that the company is certainly within right now, as well as all of the other automakers. Here's a clip.
It is worth pointing out that the current macro environment remains uncertain. I don't think I'm telling anyone anything people don't already know, especially with large purchases such as cars. And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin.
Okay, so Sozzi, translated right there. This comes after we had seen price cut after price cut after price cut from Tesla. And my take here, the price cuts right now, they are self-inflicted wound in the name of demand generation in a weaker macroeconomic backdrop where they're trying to make sure that they stave off the ramping up of production from legacy automakers, competitors like Ford, like GM, that have already had mainstays in people's garages and driveways for years.
Well, let's be clear what Elon Musk just said on that clip here. It is Elon essentially delivering an earnings warning to Wall Street. If you're an analyst, if you're going to be up all night tonight crunching these numbers in your fancy snazzy spreadsheet, you are reducing your gross profit margin estimates for this company. Margins 19.3%, gross margins in the most recent quarter missed estimates of 20%. Some analysts wanted to even see a higher number. Elon said, you're unlikely to get that number this year because we are going to come out and cut prices. Now, on that macro theme, Brad, in large part, why you see a Tesla coming out here, cutting its prices, I believe, 6 times, 2 times in the US alone this year, is because Elon and his team are seeing more macroeconomic pressures, notably higher interest rates impacting the demand for vehicles. But here's what Elon said about the state of the economy and when it might improve.
These are uncertain times. My guess is it's economic stormy weather for about a year or so, and then if we'll call it roughly 12 months, and then this is just my guess. It's just pure speculation. Stormy weather for about 12 months, and then provided there are no major geopolitical wild cards that show up, things start getting sunny around spring next year.
Brad, I was waiting for Elon to say the word debt ceiling because I was going to maybe not do that with you and just write up that article. But you had Jamie Dimon, or you had Elon Musk channel his inner storm weather person, and Jamie Dimon loves calling out and saying, I see macroeconomic storms. Saw Elon try to play in that world in the hopes of getting everybody to write up this story for tonight and tomorrow morning.
You're talking about Jamie Dimon. I'm thinking about James Gorman, who, and actually we had heard from Brian Moynihan even on some of the bank earnings that have come out where they're expecting that recession to hit. Q3 of 2023 has continued to be tossed around among the bank CEOs, and Elon clearly paying attention to some of what they are saying right now and what they're signaling to them. And so all of that considered, I think there is going to be a larger consideration for where this pricing strategy is actually sustaining the company of Elon Musk and Tesla in this near term, especially given the fact that we saw such a massive hit on the free cash flow side. This is a company that was looking to generate by about $7.5 billion worth of free cash flow as they were projecting on the most recent earnings call, or at least prior earnings call to this quarter. So that's something to keep in mind, is as the free cash flow takes a hit, that is something investors are also going to be focusing in on when it comes to how much of the production and delivery they're able to continue to move forward with. But they are saying that orders are in excess of production right now. That one thing that they're confident to say right now, Saz.
I'm going to go a little off script here, Brad, because we do have a lot of takeaways for this quarter. One for me is I think you have Tesla clearly willing to sacrifice profit margins to move vehicles in an economy is slowing down. And number two, and actually along that same thread here, Brad, you have Tesla, Elon towards the end of this earnings call, really walking back his goal to hit 2 million, the 2 million production vehicle mark this year. That was, now he is saying that is, quote, an upside outcome for the company, saying that 1.8 million is more likely. So you had Elon more on margins, more on production. I'm just surprised the stock is not down even more.
You know, one of the other takeaways too here, and I was listening in to how they were going about questions that came in from say.com as well. This is the retail investor community that is actually able to kind of Reddit style upvote the questions that they would like to get answers to. And there were a lot of questions that actually came in around this division, which is actually the smallest revenue generating division within Tesla. And that is on the energy and the storage side. And particularly here, it is the fastest growing, which is what people should remember when we talk about that part of the business. Fastest growing, had 148% growth year over year on the revenue basis there, but still brings in the smallest portion of their revenue generation. But that is the energy generation and storage revenue. But they said that the stationary storage growth will significantly exceed vehicle growth in the future. So that's something to keep an eye on going forward from here. That was one of the other takeaways as well here. Let's get into some of our vibe checks, Sozzi. I went first with my thoughts, so I'll let you go first. What was the vibe that you got from this call?
Oh, you're a good guy, Brad. I always, you know what? I just do these so I can sit and hang out with you at what, about 6:45 midweek. But my vibe is this. It's a zero. And if we were able to show that this arrow was falling off the chart and like we were able to like show this meter shaking on the screen, that was it. If you are a bull in Tesla, you are going to bed tonight at some point thinking, Elon gave me a warning on profit margins. Elon gave me a warning on production. And then I think we have an Elon that sounded, I'll say it, I dragged on Twitter, I don't really care. That sounded unprepared for this earnings call. More unprepared than I think he usually is. Keep in mind, this is a guy running SpaceX, running a company trying to put chips inside people's brains. And then, also running Tesla. Just sounded unprepared. I don't want to say much to investors. And I think it's disappointing. It's a big fat zero for me.
Yeah, chips and brains. I don't know. I need to go back and watch a couple episodes of Black. I don't know too many people that are immediately jump to sign up for that beta test. Even though we do know full self-driving sounds like it's in good shape here. I'm going to go to my vibe very briefly here. I gave this a 1 out of 5, and for a few reasons. As we were starting to hear, and ultimately the questions that did come in, really focusing around what Cybertruck, what the future models would look like for this company. Elon had said something about future models, how they envision it. They're calling it Project Robo. Referring to it internally as robotaxi. So that interesting, really didn't get too much color there, which is what investors were looking for. And then on the Cybertruck front, which is another top question that came in from retail investors and institutional investors alike. Actually, it was the number one question from retail investors. What would Cybertruck pricing and specs updates look like? And all they had to say was, oh yeah, end of Q3. That's when we'll give it a little more updates there. And guess what, guys? It's a Hall of Fame product. You got a Hall of Fame player that they're looking to put in the game with no high school stats to show, with no college stats to show. We don't even know. We just know that the window could.
It's just going to be great, Brad.
If you throw something hard enough at it.
Just great. It's got square windows and I don't know. It's electric. It looks cool and big tires. Yeah, real cool. Real cool.
Pentagon shape, right? So ultimately, we'll see how that does on the road. Let's bring in Pras here, who's got a little bit of a look at Main Street versus Wall Street here. And we heard some of that, Pras, right? Where you got Wall Street that was able to ask their questions, but Main Street also still in focus. This is a company that gets very heavily battered for social conversation in one direction or another.
Yeah, Brad, you know, they were talking about things you guys talk about, right? Pro and the street, and also Main Street, margins, price cuts. What's your thinking behind how you institute those price cuts, right? And you know, and there's a couple of things I want to know about Musk on the call today, right? Talking about that Cybertruck, that delivery event coming in Q3, end of Q3. That's something new. It is going to be kind of more later than people thought, but it's happening. Talking about orders in access to production. We'll see if that's true or not. Also, he's laughing at the fact he said it's laughing. He said, maybe we'll see full autonomy this year. How many times have we heard that before, right? So that's something that I kind of noticed. And also that shot at 2 million a year, that's possible, but more comfortable 1.8 million cars this year. So anyway, back to what you know we're talking about from the sentiment point of view. Lots of negative sentiment out there, but not all of it though, right? So looking at our longtime tech analyst, Gene Munster, right? He tweeted out there, we have this week coming up, Tesla is navigating a tough spot on the economy and at the same time investing in the long term. While it looks like they missed the key gross margin metric, it was close enough to give investors confidence that they're doing a good job of navigating this downturn. Looking at the stock right now, it's down almost nearly 6% in the aftermarket. So I'm not sure how many people are buying that, but also on a kind of more of a funny side and more of a Main Street sort of point of view. I was telling my girlfriend about the Tesla inventory problem and how everyone who was going to buy one already bought one, and now they've done 6 price cuts. My girlfriend says, "Oh, like, yeah." So I mean, you got some funny, a little roasting there. One of the main kind of gist of it is, hey, is this a mature company? Is this going places? Is this sort of what Tesla is now? Is we're going to have like moderate growth, moderate margins, and just keep expanding that sort of vehicle base, that delivery base? Or is it like, hey, valuations are really stretched even at these levels too?
Yeah, Pras, I'm taking a look at this after hours move. Yeah, extended right now as I'm just kind of refreshing our Wi-Fi interactive. Looks like that extended move actually moved lower during the call. Of course, it was down immediately after those earnings results, down by about 5.7% right now. And Pras, as we kind of continue to wrap this up too, the Wall Street versus Main Street conversation. I mean, this is one that I just think about the amount of bulls versus bear debates that have taken place in this name, in Tesla, and also the number of short positions. Is there a company that is more bet against than Tesla?
I mean, there are probably a few, but I can't think of that many. And the thing with this bull versus bear and sentiment sort of readings, you have so many retail investors that are very big into the stock. People buying, saying they're buying on the dips here on Twitter. People concerned about the margins of the price cut. So it's such an actively spoken about stock. I think there's so many. Everyone has a take, right? Bull or bear, Main Street versus Wall Street, and I think that's what makes such an interesting conversation. Is where does this company go next? And let's say they're the only company making EVs at scale, so they really have some a feather in their hat there. But from an investor point of view, a Wall Street point of view, a Main Street point of view, it's such a fascinating stock and company to talk about.
Absolutely. All right. Pras Subramanian, all things autos, all things mobility here from Yahoo Finance. Thanks so much, Pras. Brian, let's just give some final thoughts here as we think about Tesla and continue to watch the shares move lower in after hours trading following this earnings report, following this call that was quite frankly dismal from just a tone perspective or just signaling what the future might look like. I kind of chalk this up as a sack fly quarter, but also sack fly actions that they're looking at. And here's the reasoning around that. When you think about a sack fly happening in baseball, it's typically taking place to get some other runs in. And at the end of the day, I think what they're attempting to do is make sure that on the pricing strategy side, that even if they're in the near term sacrificing some of the margin, some of the overall revenue that they would typically take in, even though revenue ultimately did grow year over year, I think at the end of the day, it still comes back to how they're going to grow out a customer base that can rival and that they can upgrade over time, similar to how legacy automakers have been able to sell back in to their customer base to say, hey, you got this one on lease, just come back, we'll upgrade you next time. You keep them in that cycle, you keep them in the family of products, and that could have a better customer lifetime value for you. We'll see if that works out for Tesla in that strategy right now.
Grand slam analysis as always, Brad Smith. I'm going to come out my final thoughts a little differently. I would like to set up all the investors out there on the Auto Finance platform right now watching. So we appreciate that love, appreciate that support with the next 4 or 5 stories you might see in Tesla. First up, their solar business. We were talking a lot about this in our chat in the lead up to this. Solar business is very strong. It's an area that I need to look a little bit more into when it comes to Tesla. Free cash flow, $441 million in the most recent quarter from Tesla. Big free cash flow story over at Netflix. These are 2 companies, 2 tech giants that really burned through free cash flow the past 5 years. Now they're generating cash flow. Tesla over $22 billion in cash to end the quarter. That was very interesting. Tesla also, and Musk talking about how they are friends to the EV makers. They are not. Ford and General Motors really coming hard at Tesla. And in many cases, they are in fact winning. And last but not least, another area I think investors need to dive into is all this commentary, Brad, that Musk was talking about on lithium. Who are the main players here? What could be the top trades there? What does it mean if a Tesla and other EV makers can't get the lithium they need because it's overseas or there are supply chain bottlenecks? Lots of key considerations and more to think on Tesla besides whether they beat on sales and beat on earnings. These are the deeper thoughts you need to be having.
Absolutely. All right, we're going to continue to watch what the chatter is on the street and what more the company has to say for itself going forward from here. You've been watching After the Call with Yahoo Finance. Brad Smith, Brian Sozzi, with special appearance by Yahoo Finance's Pras Subramanian. We've got more coverage for you starting 9 a.m. Eastern time tomorrow. But for tonight, night.